Powell fires up the printer while Israel versus Hezbollah battle escalates. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, welcome back Sam, who's been covering quite the spectrum today, from the Fed Chair's dovish speech to the growing risks of all-out war in the Middle East. How are you going today, Sam?
Good, Chris. Good to see you again.
Good to see you. You really did. You covered all the bases today, but let's start off on probably, well, let's say the nicer end of this with Powell's speech. Somewhat dovish, probably what you're expecting, really. But talk us through what he actually said and how you think that's probably going to impact the market.
I think it was more dovish than expected, and clearly coming out and saying, the time to pivot is here, the time to start cutting is here. That was a clear sign. That's what I guess that's what some people were looking for. But then the insistence that we're done with inflation data, it's game over. We'll hit the target whether we like it or not. It's a finished issue. One thing he did note that he's trying to keep strong jobs numbers. So we could be seeing just a rotation away from the inflation argument and just moving towards good jobs numbers. But as we've seen from the jobs numbers, they've been horrible. I mean, they've miscalculated ridiculously. So that's not exactly a way to not pivot and not start printing money. It's more looking out for jobs numbers, which, it's something probably Trump wouldn't like to see happening, trying to help out, stimulate the economy before the election. It's probably something that the Democrats would love to see happening. But it is something that I guess you could say gold buyers and those buying into the stock market as well would love to see happening, because it's that stimulus we want. So it's exactly what the Doves wanted to hear.
Do you think that, like, if you from what he was saying and really that focus that is back on the labor market data, I mean, we've commented on this over the last few Insights episodes, speaking to different people. The credibility is really struggling here because the numbers have just varied so much with those massive revisions. But do you see, we have had certainly back up to those all-time highs in the markets. Do you see that as sustainable against this backdrop?
Look, it's hard to say. I mean, we've had some decent retracements. Is there going to be another big retracement? Well, I mean, that's always likely, isn't it? But is there going to be some sort of crash or some sort of hard landing? Look, I'm not sure. I guess some factors there might be if he opts for 50 basis point cuts or tries to keep things going slow and say, look, the jobs are strong, we can just keep it at 25. Some serious damage has been done to the economy. As we can see, everyone said, hey, you're too late. And this is just what we were talking about last week. But then again, markets were kind of pricing in this cut a long time ago. But Powell's been pretty persistent. So is this going to totally save the markets? I think it might just depend on, I guess, how long a scope you're talking about. If we can continue to melt up for, say, another 6 months or something. I'm not sure. I guess it's how aggressive the cutting is.
And that's where I'm getting a bit confused on this as well, because sort of the point I was making before, that we've really lost a little bit of confidence in the numbers and what we can trust of what's happening, because they're all over the place. If you have, against that backdrop, some hard data or not really hard data is not the right words, but once we know what that cut is, if it's a larger cut than the market was expecting, I mean, that could spook the market conceivably into not taking it as a positive, I can imagine.
Yes, that could. You're right. That could spook the market. We could see some big swings the opposite direction. I'm not sure if they'll be long-lived, though. That's the only thing. You look at, for example, Ray Dalio's bubble indicator, and all the metrics he talks about as if we're in a bubble or not. Say we're not really in a bubble yet.
Yeah, right.
So I guess that's another factor where we could have room to melt up, as it's being called. Tech things are overvalued. Tech stocks are overvalued, but What else is new? I guess they've been overvalued for a really long time. So as far as I guess the making a separation between if we're too high, if there has to be a retracement, or if we're in a bubble, there's going to be some explosive pop. I'm not sure. It could be enough to prop up the markets for a while more and let the melt up continue.
And that does make sense to me, particularly against the backdrop of the global liquidity stuff and things that I look at to say we're probably not at that phase yet. But it is interesting to have in the back of our minds how the market will, or to see how the market actually interprets this when it happens. But switching to the not so nice part of this, the geopolitical risks, they really have escalated. You highlighted this point. I mean, you've been talking about it for quite a while, the potential for the escalation. It seems like that's here. Does that throw all of that analysis we just went through out the window?
Well, it depends what you're looking at. If you're looking at safe havens, well, that's a great thing. You want, you want more bad news to happen. But if you're looking for stock market stability and everything like that, it just matters if this spills over, which who knows if this is going to spill into a massive conflict and get, Russia and China and Iran directly involved as a team, as a sort of axis or something like this in the near future. But one thing we've seen, and one thing that's been a bit of a mess on Hezbollah's side, is they've tried to delay to come up with time to, make appropriate tactics and strike. I guess you could say surgically and carefully, and that turned out to be a big miscalculation because the United States got some early intel. Hezbollah. The locations they were going to be firing missiles from and from which equipment, and relayed that intel to Israel, according to the news I've seen. And then Israel went ahead and just made a preemptive strike inside Lebanon with 100 fighter jets and took out much of this equipment. So then Hezbollah was just left trying to claw back and fire as many missiles they could, which got intercepted as well. They said their attack was successful, to a degree. Israel saying it's not successful. Of course, each side wants to look completely successful in their actions. But aside from that, it looks like it was a pretty big failure in delaying the attack, not immediately striking back and giving Israel time to collect information on where all their moving pieces are going and take them out in advance. So that was a pretty ugly shutdown. And that leaves Hezbollah in a really difficult situation, because even before this, they were saying, well, what can they do if they underperform, if they're underwhelming, it's going to show that they're just kind of pushovers. But if they do too well, if they get missiles landing inside Israel and killing civilians, Israel's likely to, I don't know if I can say overreact or, react in a much stronger response. I guess I could say that, and really damage Hezbollah, really do a large scale attack on Lebanon and hurt them badly. So they're stuck in the spot where they're trying to do not too much, not too little. They're trying to have this sort of Goldilocks size attack against Israel, and it's just not working out. And it looks like one of the only pathways is for someone bigger to help out, and someone bigger is Iran. And then that's going to take someone bigger to help Israel, and someone bigger is the US that has warships all over the region right now.
And I think this is what is always concerning about these situations in the Middle East, is that they might go in with the intention of it being, I love your use of the word Goldilocks there, that they get it right, just about right. But it only takes a miscalculation from one side for this to escalate quite quickly. And that's always a concern here. Do you think that, well, let's play that out. If that were to happen and it were to escalate much more significantly than it has already, does that result in a prolonged conflict? Is it a short and sharp conflict? Can we be comparing it to sort of the Russian situation with Ukraine? Is like, how do you view that, and how should we be thinking about that as investors?
From what I can see, it doesn't look like they want it to be a short and sharp conflict, or they want it to be over. And one of the differences between Hezbollah is Hezbollah is essentially throwing up these missiles that are easy to see and easy to take out, and a handful of drones that are easy to see and easy to take out. Iran can do the same thing, and before Iran has done the same thing. But what Iran did do as well to temper their attack, and just to say, look, we don't want to escalate, but we're going to show we're serious, is they telegraphed their attack. They said, we're going to attack at this time. We're going to attack, with this level of, ferocity. And they essentially let Western forces take down this volley of missiles. So they're just saying, look, we're serious. If it gets to the point of, I guess, an outbreak into an all-out war, the only difference would be Iran would not be telegraphing their attack. And Iran has a lot more firepower than Hezbollah, so they'd be able to really rain down volleys of missiles and potentially overwhelm the Iron Dome and hit some key targets. And that would be the big change, where they're actually delivering damage to Israel, which could spiral them out of control.
Certainly dangerous period of time. And as always, we appreciate you keeping us up to date on that. I think, you've highlighted before that in these situations, it doesn't hurt to hold a little bit of gold. Obviously we talk about gold a lot on here, but that little bit of insurance in that situation, I'm sure that's still the advice here.
Yep, safe havens. So look, if this is something that'll imminently spill over and affect the global stock market, who knows? But we have seen even the S&P 500 get spooked from some of these advancements just earlier this year. So it wouldn't be too much of a surprise if things get out of control further.
We'll continue watching closely. Well, thanks for your work on that today, Sam.
Thanks, Chris.
Thanks everyone for watching. We'll chat again soon.